Perfect. So I think we can start. Diana, Kamal?
Yeah.
Yes.
Perfect.
Hi, everyone.
Okay. First of all, thank you everyone for joining this session. What we plan to do is we organize these weekly e-invoicing sessions to discuss and have an open forum where we share some insights, discuss issues, and also answer your questions that you might have on e-invoicing. I know many of you would be busy with your corporate tax and transfer pricing compliance, which is due next month, but this is also a very important topic to be kept in agenda for everybody to be aware that by July 26, every business in the UAE has to be ready with their e-invoicing compliance. So we thought let's have a weekly half-an-hour session, just keep it open, no specific agenda, just discuss some of the points that we have come across while supporting our clients, and also see if you have any questions on e-invoicing, and we try to answer them as a group. So first of all, I'll just share my screen, and then we can take up first 10-15 minutes to discuss what we want to share as part of this session, and then probably take up some of your questions. So before we start, a quick round of introduction of myself as well as my colleagues here with me, Diana and Kapil. I'm a VAT partner with Dhruva. I've been working with Dhruva for almost close to a decade now, and my expertise is on indirect tax consulting. And now with e-invoicing, we are trying our hands to support all our clients on the e-invoice implementation. I have with me Diana and Kamil. I'll request Diana to give her a brief introduction, and then Kamil, if you could share your introduction.
Thank you very much, Git. So I'm Diana Cáceres. I'm director at Dhruva in the tax technology and electronic invoicing advisory team. So I've been my experience in the last 10 years or more has been implemented electronic invoicing globally, and this is here in the UAE is no exception. So working very close with the Ministry of Finance in the UAE to implement the electronic invoicing mandate for 2026.
Perfect.
Hi, everyone. My name is Kamil Dzikowski. I'm a CTO at Oxynus Holdings. For the past 12 years, I've been working with many different startups across UAE, Middle East, and Europe, implementing invoicing, working with Zatka, Peppol in Europe, and now here in the UAE. So pleasure to speak to you today.
Perfect. Thank you. So what we are planning to do today is just spend about 10 to 15 minutes to discuss some of the poll questions that we've been posting on LinkedIn for the past 1 week. So what we have done is we have brought them here to share what people are thinking about it, and what are the answers to these questions that we have posted on the LinkedIn. So the first question that I'm going to discuss is on the integration with MOF or FTA. So as you know, VAT grouping is a very common concept that we have here in UAE, where most of the groups are registered as a VAT group with multiple entities as part of the group being members, and they're having one single TRM. And now in e-invoicing, things might change in terms of the reporting that needs to go to MOF or FTA. So what we have discussed and posted a question last week was on, does each member need to have an endpoint with an ASP and for e-invoice reporting? Because so far it has been the representative member who makes all the reportings and is the primary responsible entity for ensuring that all the tax obligations are being met. So on this, I think let me ask Diana or Kamil if they can provide their feedback or comments on what should be the right approach for implementation of e-invoicing when you are dealing with a VAT group kind of a scenario.
So basically for dealing with the VAT group, each member, you said the answer is yes. Each member of the VAT group needs to have their own endpoint. And the main reason as well for that is because the Ministry of Finance and federal tax authorities, they want to have traceability of all their transactional data. Invoicing is not only for a VAT purpose, it's for commercial and tax purpose. It will support all the corporate tax and all taxes in the future. So yes, each member of the VAT group, they need to have their own endpoint. So it can be the same, so the same service provider, but a different endpoint.
Perfect. So commonly we have seen that most of the groups would have a single ERP system with multiple entities being created as a profit center or account for each entity. So under the e-invoicing, now it will not be just the representative member, but each member of the group will have to report their sales to the MOF FTA. So they will have visibility in terms of entity-wise turnover that each company will have in the UAE. So the answer is yes. Every company will need to have an endpoint and need to report their individual sales to the MOF. Moving to the next question that we had posted. Under UAE invoicing, what type of B2B, B2G transactions are required to be reported? Is it only sales, or is it sales plus purchases, or is it sales and imports, or all of the above? So I will request Diana or Kamel if you could provide your comments on this. Diana?
So yes,
Yeah.
here all transactions should be reported. Ideally, all for electronic invoice and all transactions should be reported to the Ministry of Finance and Federal Tax Authority. As of now, the scope is B2B, B2G. The question here is only sales, and local purchase, sales and imports. So based on the Q&A of the Ministry of Finance for imports, it's not required to have to issue an electronic invoice. However, based on our conversations, it might change and it might need to be reported under the electronic invoicing scope. So as of now, the imports, if the third party is not on the PayPal network, so it's not mandatory to be reported. However, this point will be clarified with the legislation to be released soon by the Ministry of Finance. So I would say that we need to be prepared to support and report most of the transactions to the Federal Tax Authority through the electronic invoicing mandate.
Perfect. I think just to add to Diana's point here, primarily responsibility for all businesses in the UAE will be to report their sales to the corner 5, which is MOF or FTA. But also as part of a buyer, they need to confirm whatever invoices that has been raised by their suppliers have been received and need to validate those invoices. So it will not just be your sales that needs to be reported to MOF through your ASP, but also as a buyer, you need to receive the invoices and confirm that you have received those invoices and are compliant as per the e-invoicing rules. So that is also part of a buyer's ASP's obligation to ensure that they receive and also confirm that it is a compliant invoice. So the right answer is yes, sales, and technically also purchases needs to be reported to the FTA as part of your e-invoicing compliance. As Diana mentioned, imports is currently not part of the obligation for reporting, but what we understand informally is that yes, even import of goods as well as import of services might have to be reported as part of self-billing. So as a recipient of services or a recipient of import of goods, you might have to raise an invoice on yourself and then report it to the FTA as part of the compliance reporting. Moving on to the next question in terms of the identifiers. So now typically what we have seen is that every company has a master data of their suppliers and customers, and as part of the vendor or customer onboarding, we would typically ask for a VAT TRN from the buyer or from the seller. Now, under e-invoicing, what will be the identifier that needs to be kept in master data? And this question is related to that in terms of what are the identifiers for e-invoice reporting. So when you report as a seller, what kind of information you need to have for the buyer to report e-invoice? Any suggestions, Diana? What do you think, Kamal, on this question?
So this question for invoicing purpose, the identification of businesses are the tax identification number. For VAT, for businesses who are VAT registered, is the 10 digits, the first 10 digits of the tax registration number. For businesses who are not VAT registered, is the TIN number of the corporate tax. So basically, it's the 10 digits of the tax registration number for corporate tax, because all legal entities in the UAE need to be registered for corporate tax. So the answer here is for invoicing purpose, the identification for businesses is the tax identification number, either for VAT or corporate tax. So businesses will not need to apply for a new TIN number. No, they need to use for what they already have.
Perfect. So I think the framework that MOF has introduced requires every business in the UAE to be reporting e-invoice. So even a small business or supermarket or anybody who's dealing with a B2B transaction will have to be part of this e-invoicing framework. And there could be a possibility that some of the businesses may not be registered for VAT because of their threshold being lower than 375,000 annual turnover. And therefore they may not have a VAT TRN. But as part of e-invoicing, every company, whether they have a turnover of 375 below or above, has to have need to have a TIN number. Now, companies which already have a TRN, they have a 14-digit TRN, right? And the first 10 digit is the TIN, which is being classified here, which needs to be reported as part of invoicing. So far, companies were maintaining TRNs. Now they need to have a TIN number for each entity. So if you're part of a group and the group has 10 TIN numbers because it has 10 entities as part of the VAT group, then each entity should have a TIN number that needs to be captured as part of your master data. And the invoice has to be reported with that corresponding TIN number of the client to whom you are dealing or doing business with. And if a company, for an example, is not registered for VAT, then it most likely will have a corporate tax number. So the first 10 digit of the corporate tax number that has to be then used as a TIN number for identifying a buyer or a seller for the purpose of invoice reporting. So the answer to this is yes, all of the above. So you need to have now maintain not just a TRN, but also a TIN number as part of e-invoice implementation. Moving on to the fourth question, under UAE e-Invoicing, where should mandatory data fields come from? So typically, we have seen that many companies have an outdated ERP, and they have a limited chance of making any changes on the ERP. Then in that case, and let's say there are about 50 data field requirements as part of UAE e-Invoicing. Then if you cannot make any changes in the ERP, then how will you meet the e-invoice compliance requirements? To answer this, I'll request Kamil to share his views in terms of can this be through ESP or the companies need to upgrade their ERP to comply with e-invoicing?
Yes, so basically, according to the documentation, the mandatory data fields, they have to come from the ERP system or accounting software or a billing platform that actually generates the invoice data. That's how it needs to be. It doesn't happen on the ASP level. Accredited service providers should not interfere or add or enhance data in any way.
Perfect. So,
However,
yeah, Diana.
However, here as well, Camille, because at the corner between 1, 2, 3, and 4 is not regulated. So corner 5 can agree with corner 2 with the service provider to take some data, extract the data from different sources. Because especially in this region, they are all upgrading the ERP system. Some of the companies don't have an proper invoicing system, so they have an extra other systems, or sometimes it's manual. So there are options as well to upload these data fields to the invoicing solution with the help of the accredited service provider. Sometimes they can upload the master data, and also the service provider can take the mandatory fields from the master data without without being taken from the ERP system. So there will be different options that companies can discuss with the service provider and to see what is the best option for them.
Perfect. I think, yes, ideally, the data should be maintained at a ERP level, but possibly you could look at having some workaround and talking to your ESP to see if there is some flexibility. Otherwise, companies will need to take a call in terms of whether they need to upgrade their ERP system to comply with the invoicing compliance that will be effective from July 2026. Perfect. Moving to the last fifth question that we had posted on LinkedIn. Under UAE invoicing, does buyer or buyer ASP need to validate supplier's invoice and whether it has all the mandatory fields? Because I understand that ASP for the seller will already do that activity of ensuring that the invoice is compliant. But does the buyer also need to do it? Any thoughts on this, Diana, Kamil?
Yeah, I can help with that. So basically, the buyer is not responsible for validating the invoice. Any validations on the buyer side are considered business processes. However, invoice has to be validated on accredited service provider level, starting from a supplier service provider, which is corner 2, and then buyer service provider, which is corner 3. There is no requirement on the buyer side whatsoever to do validation for the invoices. And important thing is that if invoice validation will fail at the corner 2, so the supplier's service provider, it will be rejected by the PEPL network. So simply will not be processed any further.
Perfect. So I think, yes, if to give you a brief background around this, so what will happen is corner 1, which is the supplier, will send the invoice to corner 2, which is the seller's ASP. They will transmit and exchange those invoices with corner 3, which is buyer's ASP, and then with buyer. So invoice will be exchanged between the 4 parties, but there will be a tax data document which will be generated by corner 2, which will be transmitted to corner 5, which is MOF or FTA. So out of the invoice, all the mandatory data fields, some of the data fields will go to FTA as part of invoice reporting. And similarly, the corner 3, which is buyer's ASP, based on the invoice which is received from supplier, they will also send a MLS, which is a message level status transmission that a corner 3 has to do with FTA to confirm that they have received an invoice from the supplier. So there will be a lot of activities to be done by both ASPs at seller level as well as at buyer level, and that's the part of invoicing. Yeah. With this, yeah.
Yes, here what is important as well is to consider that as part of the implementation process, all companies and businesses need to agree with the third party, with the buyer, what are the conditions to avoid rejections of the electronic invoice. And the reason why is because there is a very limited time frame where the service provider needs to acknowledge they receive and send the MLS. In this case, for this specific question, the service provider or the buyer needs to validate and check the invoice and send the MLS, the message level status, to the Ministry of Finance and corner 2, who is the service provider of the seller, in 10 minutes. So after they receive the invoice from the corner 2, corner 3 has 10 minutes to send the MLS. So there is a very short time frame, and the thing here is the complexity for the UAE is unique because PEPL has been implemented only in the first time, 100% for UAE market. So in other jurisdictions who are adopted to PEPL, so the time frame is longer. For Malaysia, for example, is 24 hours, but here the time frame is just 10 minutes or 15 minutes for other operations. But this time frame is very limited in the UAE.
Perfect. So with this, I'll just stop my presentation and probably just have a look at the questions that you have posted on the chat box. I'll request everybody, if they have any questions related to invoicing, we can try to address them in the next 10 minutes that we have with us. I'll just go through some of the important ones and see. Okay, so the first question that has been posted on the chat box is on currently input VAT of other tax group members can be claimed by another tax group member as TRNS same. Will it be possible in e-invoicing? Same for sales tax invoice also. Company A issue tax invoice in the name of company B if both are in the same tax group. So again, so in terms of the e-invoice reporting to FTA, it has to be done entity-wise. In terms of input VAT recovery, the provisions under the VAT law currently talks about the fact that all the invoices which are received on as a purchase is being made by a representative member. So technically, if you're part of a VAT group, you will be entitled to input VAT for any entity A or entity B, because all of them form part of the VAT group. But yes, you will have to maintain your invoice purchases as well as your invoice sales entity-wise to ensure that those are recorded properly. But yes, input VAT recovery is fungible between the VAT group members. So there should not be issue in terms of utilizing the input VAT of entity B in entity A's tax liability. So because under the VAT law, both the entities being part of the group are considered as a one tax person. So there should not be an issue. But yes, as part of reporting, it has to be done entity-wise. What about export invoices? So I think this question is related to the reporting, B2B, B2G reporting, and probably Diana, if you could answer in terms of how do we need to manage export invoices and do they need to be transmitted to the overseas buyer?
Yeah, so again, this point will have more clarification with the legislation. However, as of now, if the buyer is not on the PayPal network, you need to do it as you are doing it now manually. If it's on the PayPal network, you can issue the electronic invoice as well on the PayPal network. However, for exports, you need to report as of now, you need to report this electronic invoicing to the Ministry of Finance and Federal Tax Authority, and you will use that a dummy endpoint that they will be available to you for reporting purpose. So as of now, we can say yes, you need to report it in using this method.
Okay. The next question is on when is the regulation expected? $1 million question, I would say. Would it be applicable from to all the UAE businesses from first day of implementation, or will UAE follow a phased approach? So in terms of the regulations, this was expected to be released soon. I believe in August. Currently, they are the government, the legislation which are generally issued in August, they are on leave. So we expect that in September it should be out. But yeah, I would request Diana to share more insights on when is it expected and what is the approach in terms of the implementation. Will all the UAE businesses be part of the first day of implementation from July 26th?
So in terms of legislation, the Ministry of Finance is working and it is expecting to be released at the first week of August. However, there are some amendments in the regulations and some internal discussions that are being finalized, and we are expecting, as Git mentioned, very soon. In terms of the phases, so in the long term, all businesses in the UAE or most of the businesses will be required to issue an electronic invoice in the UAE. However, the rollout will be announced by the Ministry of Finance by the end of this year. We are expecting a few phases for the rollout, not many as Saudi, but only 5 or 6 phases. So we are expecting that they can start with the large entities and to start for the 1st of July 2026. The reason is, one of the reasons as well, the rollout approach will be announced by the end of this year is because they need to announce us first the invoicing providers that are accredited by the Ministry of Finance. At the moment, and Oxines, Camille is leading the accreditation process with the Ministry of Finance. I have to say that only 6 or 7 invoicing companies are being doing in the accreditation process, and we are proud to say that Oxines and we are part of the accreditation process just to finalize. So this is something that we will expect in the coming months. So first, the legislation, then the list of accreditation service provider, and by the end of this year, the rollout phases.
Perfect. I think what we've been discussing and we've been hearing is that there is going to be very limited ASPs in the market. It is not that every company, which is a technology company, can nominate and be part of the ASP list. And therefore, we'll see a very limited list of selected companies who will be entitled to be ASP as part of this regime. The next question, I think, is for Kamil. If in 10 minutes, if the invoice is not approved by the buyer, what will happen? So let's say if supplier transmits the data to their ASP and the buyer does not confirm, then what happens?
You are on mute, Camille.
You're right. So there is actually a few questions around this topic. There is another one about manual validation, confirmation of receipt by Joan. There is also about validation of invoices by Nirav, whether it's deemed received by the received date or not. So let me answer all of them at once because it's kind of the same subject. There is no automatic rejection or cancellation at the network or regulatory level if an invoice isn't approved by the buyer within 10 minutes. There is no such thing as a 10 minutes limit. PayPal network works nearly real time. So the invoice is received directly to the buyer. And if there is any internal process that will cancel the invoice, for example, it has to be handled through credit notes or other documents at a later stage. But it has absolutely nothing to do with, and it's not legally required also to approve invoice from the buyer's side. Now, about the validation date, whether it's considered as a received date, it's actually the same thing. So the received date is not based on whether the buyer approved or validated the invoice. For VAT compliance, the key date is the date of supply of goods or the invoice issuance date. And here I think you need to issue invoice within 14 days from the date you supplied the goods.
So Kamil, I think his point is on the fact that there is a time limit of 2 tax periods to recover input VAT under the VAT law. So as a buyer, I can recover input VAT within 2 tax periods from the date of receipt. So yes, to Nirav's point here, there is no PDF. There will be no validity of a PDF invoice once the e-invoice is implemented. As in when you receive a e-invoice through your ASP, that will be the date when will be considered as a receipt date. Now, in terms of input tax recovery, there has to be also have an intention to pay. So based on intention to pay, you could still recover the VAT as in when that second condition gets fulfilled. So yes, but in terms of the receipt date, it will be based on when the invoice is transmitted by the supplier to the buyer through their ASPs, and that will be the date which needs to be considered for recovering your input tax within 2 tax period deadline.
Yes.
Just to clarify here as well, Kate, as Camille said, from the buyer's perspective, there is no rejection of electronic invoice. However, they need to issue, and if it's something wrong, they need to issue a new a credit note, and a new tax invoice or commercial invoice. However, between ASP service providers, there is a service level agreement between them that is mandatory from the UAE PayPal Authority, and is mandatory to send the MLS from corner 3 to corner 2 and 5 in 10 minutes. So this is the time frame that is given by the UAE People Authority, and this is the SLA that need to be complied all service providers in the UAE. So I think just to have clarity in 10 minutes, and it's not the 10 minutes from the buyer, but is from the service provider point of view.
Perfect. Moving to the next one, will there be processing of invoices with warnings if there are minor issues, or it will be completely rejected?
No, so for this, we skipped one more. We'll go back to it. This one, if there are critical errors in mandatory fields, invoice will not be processed. It has to be corrected before resubmission. However, if there are some minor errors, it will still be sent. It will just generate warnings. Before there was a question about associated of persons registered only for VAT. Who can answer that?
Association of persons. So any company or any person who is doing undertaking an economic activity or undergoing a business activity has to be part of the invoice. So even if I'm an individual, but I'm undertaking, I have a trade license and I'm doing some business, then I need to be part of the e-invoicing requirement. If it's only a B2C, let's say I'm selling it to end customer who is not registered for VAT, then it will not be part of the e-invoicing. But any person who is registered for and is undertaking a business activity will have to be part of the e-invoicing regime.
Yes.
So moving on to the next one, won't an individual company under the same TRN number have all the same TIN number? Brito, to your question here, every company, even if they are a member of a VAT group, will have a VG or a suspended TIN number, which will be nominated to them under the current system. So now after in the future, and once the e-invoice is implemented, as part of master data cleaning activity, you have to obtain this TIN number, which could be suspended or could be part of the suspended number. So it may not be the same for all 10. Let's say if a VAT group has 10 members, they will not have a same TIN number. They will have different TIN numbers as part of the VAT group, but they might have a TRN based on the representative members number 10 digit, but they will have a separate TIN number as well. So as part of this activity, every company will have to obtain this TIN number from each of their buyers and sellers and update their master data.
Yes. There is a question here. If the invoice is issued and correction is required, how can we correct and issue the invoice? So here, if they need to correct the invoice, so they need to issue a credit note. Mandatory issue a credit note. There is no rejection of the electronic invoice. There can be a negative MLS, but no rejection of electronic invoice. So they need to, for correction, they need to issue a credit note and reissue the electronic invoice. There was another question about if there is under the scope is credit note and debit note. In the UAE legislation, there is no concept of debit note. So there is like credit note and invoice.
Going back, there was a question from Xylon. What is the ruling on all the intercompany invoice received and issued without VAT? Well, basically, all of the B2B and B2G invoices needs to be sent to the government. Of course, within the same tax group, they can be issued without VAT, but nevertheless, they have to be synchronized with the government. Question about the deadline, April 2026. It's actually due July, I believe, and we don't know if it's going to be postponed or not. It's hard to say at this stage. It's up to the government, to be honest. But for now, we have to stick to what we know.
Yeah. The next question is on, is e-invoice applicable to local sales or export sales? Let me answer to this. E-invoicing is applicable for all local sales as well as export sales. If the overseas buyer is not on PEPL network, there will be a dummy TIN number which will be provided by MOF, which has to be used for reporting all your export sales.
So I think one point to clarify for all of us is electronic invoicing is not subject only for VAT purpose. It will cover all transactions if you have to report it in your VAT return or not. So transactional data, taxable supplies, exempted supplies, zero-rated supplies, out-of-scope supplies, all transactions are under the scope of electronic invoicing. The reason why is because all your transactional data needs to be seen by the tax administration. It's not only for VAT purpose, it will impact as well your corporate tax, because going forward, when electronic invoicing will be implemented, your support for VAT purpose, your import tax, for corporate tax, your tax deductions would be the electronic invoice, which is the XML file in a sense.
I think we are running out of time, but maybe let's take last two questions before we conclude. So one, let me ask the question. So if in case a company doesn't have a 187,500 turnover in a year, does e-invoice is still mandatory? Diana, do you want to answer? So if a company is not registered for VAT, do they still need to be part of e-invoicing?
Yes. So it's not it's regardless of VAT registration, still will be part of the electronic invoicing. So all companies in the UAE, regardless of the VAT registration.
I'll pick one
Perfect.
for me. There is a question, a technical question about 50 data fields required in the XML file. Are all of them required in the PDF invoice from Noman? All mandatory fields must be present in the XML files, but in the PDF, which is a human readable form, you only need to show the key business relevant fields, not every XML field.
So I think to Noman's point, see, under the UAE VAT law, so far we had those 12 particulars under Article 59, which were required to be part of the PDF invoice. Under the UAE e-Invoicing, the PDF invoice will have no sanctity as such, because FTA will not consider that PDF invoice going forward. It will only be used for all your business dealings, commercial dealings as such, and for sharing it if company needs a PDF invoice. But for all tax purposes, FTA will only recognize that XML file, which contains all the data fields. Out of those 50 data fields, MOF will need 15 to 20 data fields, which they will ask ASP to share with them, which is nothing but tax DD, which is a tax data document file that needs to be supplied by all the ASPs to MOF. So out of those 50 data fields, there will be some of the data fields which MOF will request ASPs to share with them. So frankly speaking, these data fields have to be part of your XML. PDF will not have any sanctity going forward once e-invoicing is implemented. It will only be used for commercial purposes. I think with this, I think we should conclude. We have a lot of questions, but I think we are short of time. Maybe Diana, you could share individual responses to each of these questions and send it to all our attendees here. I'd like to thank everybody for attending this session. Hope you will found this useful, and if you enjoyed it, please do be part of this sessions that we're going to organize every week. We'll be discussing different topics. There'll be different speakers who will be coming in, and we'll be talking different topics on e-invoicing, and we'll be happy to share our knowledge with all of you. Any concluding remarks, Diana, Kamal, please?
No, thank you so much for very good questions, and hope to see you next week.
Yes, thank you very much, all of you, for being in this session. As Git said, the main purpose is to share knowledge, because this is not going to be an easy journey. The game just is starting now, and there is a lot of complexity. So it's better to be prepared now. And this is what our purpose is, sharing our experience and giving answers to your questions. Thank you.
Perfect. Have a good evening, everybody. Bye-bye.
Bye-bye.
Bye.